Ha ha! Hey, what is going on, crypto people? Listen, most people still price XRP and other cryptos like a stock. That's wrong. Settlement assets don't pay dividends. They pay convenience yield by cutting capital and time costs. So tonight I'm going to show you why velocity plus liquidity depth plus required inventories reprice XRP, and why dividing Bitcoin's price by XRP supply is just freaking arithmetic. It's not. It is not valuation. All right. Bam. Listen, this is a quick reset. Ripple does not equal XRP. Can't treat the asset XRP the way you treat Ripple. It's a different thing. Ripple's businesses earn P&L. XRP value comes from convenience yield as a settlement asset. If you price XRP like an equity, you'll miss the whole game. Settlement assets don't pay dividends, they reduce capital and time costs. Here's the model that actually moves the price. Price base is a symbol for velocity times liquidity depth times required inventories. Velocity is how many times each unit gets used or reused for settlement, hedging, borrowing land, LPing, right? Liquidity depth. Depth is how cleanly size trades across venues without moving the book. Required inventories is collateral and working balance desks must hold as throughput and volatility rise. Must hold. Important. When collateral eligibility creates holders and Ripple Prime access creates reuse of the asset XRP, the effective flow shrinks, books deepen, and price re-anchors. That's why market cap is a clumsy ruler here. Tonight I'll show you the tells and not the tweets or people like Mr. Weisberger hopping on X who don't quite understand what's going on. Okay, we're going to get into it. I appreciate you guys checking in. Do me a favor and hit the like button on the way in. Yeah, this live stream is. I got some inspiration from a dude, Mr. Weisberger. I think his name is Dave. Didn't get it right. Doesn't understand. He lost me at. We got to look at this thing like an equity. He lost me at that. As soon as he said it, we're going to cover that. Rachel W., how are you, miss? Appreciate you checking in. We're gonna get into that. You got look. It's important that you got to come to your own conclusions about stuff. Can't be listening to people on YouTube or on X. You got to do your homework. We got so many tools at our disposal for us to do our own homework, to do our own due diligence. After all, we are on a journey of becoming a sophisticated investor. It's important. Dave's on X trying to wax poetically, but he's incorrect. His mental model is off. He's got a Bitcoin mental model. These assets are different than Bitcoin. Uh, Digital gold, scarcity, and these kind of things. The XRP asset is a settlement asset. People need to understand it. We're going to cover the XRPL. We're going to cover XRP. We're going to cover the right mental models to understand. We're going to look at it from the institutional perspective, and we got to understand and come and realize why Ripple keeps saying institutional DeFi. It's not about the numbers that they'll bring. It's not about the grade of the XRPL, institutional grade. It's not about the product, institutional. It's about the institutional lens and how they see the asset XRP and how they see the XRPL. That's what institutional DeFi is. It's from the institutional lens. We're going to cover that. We're going to cover that as well. Appreciate you guys checking in. Happy Veteran Day to those who serve. We appreciate you. Thank you for your service. I-Man checked in. What's going on, bro? I-Man was first in the building. Jay Dell is here. How are you, my friend? Rachel W. What's good, miss? Payment XRP says here in Encounter 4, live from Ohio, trucking, burning miles and enjoying the show. What's good? What's good? Appreciate you being here, bro. Be safe in those roads, my guy. Devon, Steve. Good morning. Good morning to you, Devon, Steve. Cali Cat is here. Oh, that's funny. I remember that joke. Dave's not here. No, I'm Dave. Dave's not here. No, no, I'm Dave. Yeah, I remember that. I remember that. I man. Uh D Dre's in the building. Good to see you, my friend. Appreciate you checking in. Appreciate the wishful, the well wishes as well while I was out, my guy. Appreciate that. So let me share the post. I'm gonna share a little 2-minute clip from this post so we can have some context and perspective for the live stream today. It's important that we understand and we know what it is that we hold. Shout out to Flair Networks, new TVL metric numbers. That's cool. That is awesome. Firelights around the corner. I hope you're amped up about that. I hope you're amped up about Firelight. Ooh, what? And I actually use Firelight in an example here that I'm going to share with you. So, of course, after I shared this post on X from David, well intended, but misguided, misinformed, I'll share my back and forth conversation with ChatGPT. All right, so let's do this. Let's get into it. Guys, do me a favor, hit that like button on the way in. That'd be super cool. You know how we do? You know, we like to have just as many likes as we got viewers in the stream. Appreciate that. Do me a favor and hit that sub button if you haven't subscribed yet. We want to get you out of that 55% or so of people who are watching not subscribe. We want to get you into the subscribe land. We appreciate you. We're trying to get to 10,000 subs, and we know with your help we can get there. Will you help us out? Get to 10,000 subs, hit that subscribe button. And don't forget to ring that notification bell so that you know whenever we go live or whenever we upload a video. So this is David Weisberger. I'm sure he's a nice guy. He came out to support John Deaton at the John Deaton event when he was running against, you know, that person, that female person at Massachusetts. That's what he says here. My take on XRP, VIS, Bitcoin. I don't even know what that means. But anyway, rather than focus on one clip, this goes through the logic. Okay, not really, but it goes through his logic. So we're going to go to right here. Starts at about minute 4:06 or so. Just take a listen to Dive White. You know, he was part of the recent Twitter Spaces with the dude who's just completely lost his mind and Gary Gardone. And anyway, let's take a listen to this.
Maybe don't care for the purpose of this conversation. For the purpose of this conversation, we're just going to consider Bitcoin on the side. Now, when it comes to XRP and every other token.
Oh, by the way, he was saying he may be wrong in that he took a position on XRP because he can believe it can, 2 or 3x. But anyway.
The value has to be the same as with an equity.
Take a listen to this again.
For the purpose of this conversation, we're just going to consider Bitcoin on the side. Now, when it comes to XRP and every other token, your path to value has to be the same as with an equity. It has to be that the network itself that the token represents.
Oh, wait a minute. Wait a minute. You're not going to hear that. I didn't share the sound. Gee whiz. Let me do that again. Apologize. This take 3. Take number, take 3. Let's go and try this again. All right, there we go.
For the purpose of this conversation, we're just going to consider Bitcoin on the side. Now, when it comes to XRP and every other token, your path.
Hold on a second. Why does it feel like I didn't share it correctly? Says I share with the sound. All right. When it comes to XRP, your path. Okay.
On the side. Now, when it comes to XRP and every other token, your path to value has to be the same as with an equity. It has to be that the network itself that the token represents will earn revenue, and the token holder will, one way or another, get a piece of that revenue. That could be by direct profit sharing. It could be by the fact that tokens get burned as revenue is earned. It could be by you need to own it in order to use the network, in which case it's a user fee. But no matter how you want to look at it, there has to be a reason for that. Now, the numbers of potential revenue are potentially massive. There's no question about that. But the one thing I know from history is that when you have a utility, something that's like a commodity that is switchable, that the companies that control the financial system and the ones that will control the financial system can switch from one network to another if the cost gets prohibitive, it will restrain the cost of that network and therefore the value of those tokens. And so understanding that, my mental model for XRP isn't that it can't be an investable asset. In fact, it could appreciate a couple of times from here easily without violating any of the things that I'm saying. And to me, that makes it a potentially good investment. Now, I'm not saying it's a great investment. I'm not recommending it. I don't care. I decided that it was worth a position, and so I own a position. But what gets me completely crazy are these idiots who talk about this in terms of $10,000 prices or $1,000 prices. Understand the math. Everyone tries to compare XRP to Bitcoin. There are quite literally 5,000 times more XRP tokens than Bitcoin. So if you're going to divide by a Bitcoin price, even to get to equality, you literally have to divide by 5,000. That means, just for simple math, guys, that if you think XRP is going to approach Bitcoin, that $21 is where you're expecting. So understand what that means. If you think it flips Bitcoin, you're saying 21. So those people calling for 1,000 are calling for something that is, quite frankly, on its face absurd and clearly innumerate or can't do math. So yes, I have a problem with all of these people who say that. I also have a problem in the sense of Ripple announcements being equated with XRP. In the early days of Ripple and XRP, they made it very, very clear. The Ripple executive team was out virtually every week at every conference saying Ripple and XRP are not the same thing. One is a token, one represents an operational business. Well, that's still true. The only difference is now that they've decided to get into prime brokerage, which I think is a brilliant move, by the way, that they need the XRP on their balance sheet to be robust, because that's what gives them their advantage, the balance sheet. Because prime brokerage, after all, is a financing business where what they do is you use your balance sheet to make profit by providing leverage to your clients on a risk-adjusted basis, and you provide software for them to do so. They bought Hidden Road, they bought custodians, they bought other components. They're building what could be a very interesting business. It's one of the biggest businesses for Goldman Sachs and Morgan Stanley. So there is a lot to be made by Ripple, the operational company. XRP, the ledger, they need it to not go down. They don't need it to go up, although they would like it to go up, obviously. They don't need it to go up. What they need to do is be able to operate their business in a cost-effective manner. So once again, if the price of XRP goes up too much, they're, just like everybody else, going to be forced a little bit to switch. They're not going to subsidize it for very long. Sure, they'll subsidize it for a little while because if the price goes up, it makes their balance sheet that much more impressive. But you need to understand that dynamic in play. That is the bottom line of the analysis. We could talk about it more. I'm happy to do so. Happy to.
Okay, so I took up until that, minute when I started the, minute 4 or 6. I took that and I put it into AI so that I have the whole transcript, right? So I got the word for word transcript, right? Use AI, right? Use Otter and use AI. Once I got the transcript, because I don't know if this is on YouTube or not. So anyway, use AI. I took the exact wording, so the whole thing he just said, and I inputted it to ChatGPT. Okay? So let me welcome some more people in, and then I'm going to share with you. You're going to have to put up with my rambling. My prompts to ChatGPT are rambling, right? It's just my thoughts out loud. You have to put up with that, but we're going to do it that way. All right. So let me welcome some more people in who checked in. The Lady of Crypto's in the building. What's up with you, Keyless? How are you, my friend? Joe Buddy's in the building. How are you, bro? Rick Cisneros is here. What's up, brother? Yeah, I had the wrong thing, so I hope that ended up working. Um, did the volume work good? Yeah, your buddy GPT. Yeah, that's right. I mean, that's what I called it one time. Miss Crypto Caesars is laughing at me. Joe Buddy says, I'll stake for yield in 2026. In the bear market, it's too soon now, too risky. I lost 24,000 XRP on Vold, so no one can say my paranoia is unwarranted. Yep, I hear you, my friend. You don't have to defend your positions here, bro. You know that. Rick Cisneros is in the building. What's going on, bro? CJ, here where FXRP is a new paradigm shift. We need for the community to stop using utility token and start saying FXRP and STXRP are the institutional DeFi tokens for the XRP. I agree with you 100%, Rick. Jason, oh, we don't do this AIX 249 token during the pre-sale stuff, so the Blue Wrenches can take care of that comment for me. Let's go. All right, so I'm still sharing. Let's go here. All right. All right. So you can see this is the whole transcript, the whole thing. Right? Remember, he says when it comes to XRP and every other token, your path to value has to be right. So I did the whole transcript, right over however long that was, 2-3 minutes, maybe a little bit more than 3 minutes. The whole thing, right? I don't want to read it all, but it's just the whole transcript. It's just his thing, and I put it in 2 AIs. The second one being ChatGPT, right? I said, where do I say something? I said, so what do you make of this copy, right? So what do you make of this copy? I think that it is still an old way of looking at a new asset class, which should come with its own unique ways of looking at it. What are your thoughts? Right? That was my thinking out loud part right there. Right? Just so you know. ChatGPT 5 thinking said, love that you brought this. Here's my take, clean and straight. Here's what it gets right. Ripple does not equal the asset XRP. Corporate earnings do not equal token value. True. Prime brokerage is a balance sheet business. Hidden Road, which is now Ripple Prime, plus custody and treasury is a real P&L machine for Ripple. Switchability matters. Okay? Remember we talked about they're going to switch to a different thing because it becomes cost prohibitive, right? Right? Remember that part? All right. So switchability matters. If routing becomes too costly, slant fragile, institutions will route around it. That's not what he was talking about. But anyway, where the model breaks, value, quote unquote, like an equity, is the wrong template. Settlement assets are not priced by discounted cash flows. They are closer to monetary commodities with a convenience yield. Value comes from being useful collateral, slant liquidity that reduces, do that again. Value come if I can do that. I don't know if I can highlight this. I think I can. Value comes from being useful collateral, slant liquidity that reduces capital and time costs. Think treasury bills and repo or oil in logistics, not stock dividends. Market cap does not equal a binding ceiling. Like this headline cap, price times supply, ignores float, ignores depth in markets and velocity. If required inventories, right, parentheses, buffers and collateral, rise and tradable float tightens, while turns per unit, reuse, increases, price can re-anchor higher regardless of the naive market cap is too big trope. Okay. Another one, point three of where the model breaks. The 5,000x more than Bitcoin argument is simply arithmetic. It's not economics. Important to note. It's arithmetic, not economics. It's a different job, throughput and settlement versus store of value. We always kind of say each chain is going to have its own use case. We got to think of it in terms of the job that it performs. Throughput slant settlement versus store value. XRP and the XRPL versus BTC in the Bitcoin blockchain. Different float, escrow slant locked versus freely traded. It's a different valuation driver. Different valuation driver. Velocity plus liquidity structure, XRP, not digital scarcity alone, Bitcoin. Right? So comparing a unit price by dividing BTC price by supply is a category error. Okay? Number 4, David said this. If prices rise, they'll switch. ChatGPT says that is overstated. XRPL fees are denominated in drops. When XRP's USD dollar price rises, fees drop in US dollar terms. Unless the protocol parameters change. The binding constraint isn't price per coin, it's volatility. Remember how David Schwartz kept going on and on about harvesting the volatility, right? So the binding constraint isn't price per coin, it's volatility, haircuts, and hedge costs. If higher price comes with deeper books and cheaper hedges, it can be easier to use, not harder. Point number 5, where the model is broken. Ripple doesn't need price up, right? That was from him saying that, quote unquote. David saying that. That quote, that statement misses the balance sheet mechanics. A higher, stabler XRP improves collateral quality, reduces haircuts, slant the VAR, and widens Ripple Prime's credit capacity. It's important. That's a big, important point there. A higher, stabler XRP improves collateral quality. Again, from Ripple's latest blog, Ripple Prime is now expanding into collateralized lending for XRP and supporting a rapidly growing base of institutions trading XRP-based products, right? Ripple wants stable, liquid, hedgeable XRP at scale, which usually coexists with a higher base price. The better mental model for settlement assets like XRP. There's this thing, price base. There's a symbol here. And the symbol, I think the symbol means moves up to. Price base moves up to velocity times liquidity depth times required inventories. Velocity is reuse across settlement, slant hedging, slant LP, the reuse of the asset. We're going to get into that as well. The depth is tighter spreads, larger clean clips, inventories, collateral plus working balances, sized to throughput, slant volatility, rising in any two shrinks effective float, which means repricing. All right. On the 1,000 XRP is absurd line that Dave used. It's fair to say most extreme targets ignore liquidity realities, but the ceiling is not set by unit count. It's set by how large institutional inventories, that's how much XRP they hold, and velocity can get relative to free float. Dismiss the extremes, but don't defend the argument with the supply division, the arithmetic that Dave is trying to use. Here's how to evaluate from and for practical tells as well. Collateral status and haircuts. Is XRP on eligible list at sane LTVs? We still got to wait for these things, right? Because they're just getting into motion with Ripple Prime. The borrower utilization and borrow rates. We're going to look into that. Rising plus stable equals real demand. Order book depth, median spreads, XRPL throughput and latency. Can it carry live quarters cleanly? On-market rebalancing disclosures like the XRPN Treasury policy as well, right? So what I did here is I took this little formula. That's not a formula, but this is how hedge funds and institutions rather look at markets. They use this little kind of, quote unquote formula, price based more than velocity. All right, proportional to price based, proportional to velocity times liquidity depth times required inventories. I said, can you explain to me a little bit more in depth what that formula is and what it means? And what is the symbol that comes right after the base and before velocity, right? Great question. The symbol you're asking about it means is proportional to, price base is proportional to velocity times the liquidity depth times the required inventories. So it reads as the durable, sticky price level tends to rise when A, velocity, B, liquidity depth, and C, required inventories rise. All else equal. It's a relationship. It's not a hard equation, right? And it tells you how to use it in plain English, right? Price base, think where price wants to sit once hype fades. The sticky equilibrium zone, supported by actual usage and market microstructure, not just a single candle. Velocity is turns per unit. How many times one XRP can be used? What is it? How many times a unit of XRP gets reused per period across settlement, like hedging, settlement, hedging, borrow, lend, and LP? Why it matters? This is where Dave misses it. More turns equals more economic work per coin. The same float supports more activity, which supports a higher base price. Talks about liquidity depth here. What is it? The capacity of the market to absorb buy and sell size without big price impact. Why does it matter? Deeper books plus tighter spread reduce execution costs. More participants can run size, which leads to demand, becomes stickier, which leads to a higher base price, right? Required inventories, right? Parentheses, buffers, slant collateral. What is it? The working balances institutions must hold. The working balance and institutions must hold. Collateral, parentheses with haircuts, the MM /LP, market maker /LP inventory, and operational buffers, size to throughput, and volatility, which is the VAR. Why does this matter? The bigger the buffers, the smaller the effective tradable float, which leads to upward pressure on the base price. Pulling it together. In intuition with simpler numbers. So imagine velocity rises from 3 to 6 turns per day, more reuse via prime slant hedging. Depth doubles, 100,000 order now moves price 20 basis points instead of 40. Required inventory rises 50%. More desk holding XRP collateral slant working capital. Okay? Even with the same headline circulating supply, the effective float facing the book shrinks, and each coin does more work in a deeper market. Each coin does more work in a deeper market, supporting a rapidly growing base of institutional trading XRP based products, growing the size of the market. Right? So, even with the same headline circulating supply, the effective float facing the book shrinks, and each coin does more work in a deeper market. Your price base tends to re-anchor higher. Common misunderstandings. Velocity alone pumps the price, not necessarily. It's velocity plus inventories. Someone must hold the collateral and buffers, ideally with depth and proven. Another misunderstanding. Market cap caps the price. Headlines cap ignore float, haircuts, and turnover. Price moves the marginal tradable float, not the whole supply. So some other stuff here, some KPIs to watch. That's awesome, right? So I spoke to this quote unquote formula. That's not a formula, but institutions tend to use this, price thing. Higher price shows up when velocity, depth, rise together. Price chases plumbing. So it says here, I just recopied something that is said here. That symbol means proportional to. A higher price base shows up when velocity, which is the recent use of the asset, depth, clean execution, and required inventories rise together. Price chases the plumbing. So I said, so give me I'm talking to a 14-year-old version of this copy. Give me the 14-year-old version that I would say to a 14-year-old teenager. All right. That symbol means goes up with. So the price base, which where the price likes to sit, goes up with three things. Velocity, which equals how often the same coin gets reused. Reused a lot equals good. In Crypto X, everybody thinks that's bad. Reused a lot equals good. Depth equals how easy it is to buy and sell without moving the price a lot. Required inventory, the three things. Required inventory equals coins big players must keep on hand, parentheses, collateral buffers. When coins get reused a lot, trades are smooth and big players have to hold more coins. The price naturally settles higher. Price follows the plumbing. ChatGPT went on to give another analogy. If I was talking to a teenager, think of a popular game server like EA for Madden. If players are all in matches all day, that's velocity. The servers handle big lobbies without lag. That is called depth. And teams must keep backups ready. That's inventories. That gains value sticks higher because it has all three of those things. It's the same vibe with XRP. Let me welcome some more people to the stream before I continue on with my thoughts with ChatGPT. Cushy says, hello, everyone. What's going on, Cushy? All right, we got to let this dude go. Got to let that dude go. Great evening, Steve. What's going on, Crypto Dragon Emperor? How are you, my friend? Appreciate you checking in, sir. Ski Mask Citizen is in the building. What's good? Appreciate you checking in, man. Oh man, we got another one on here. What in the world? We have to get rid of these dudes. I got some scammers coming on here. That's not great. Not great. All right. So yeah, welcome the new people in. All right, I'm gonna continue on here. So I said I like it. Thank you. So would this be an example of reusing XRP? I have my XRP on a ledger. I meant that's supposed to be MIT, MINT. I meant FXRP, FXRP on Flare Network. I take the FXRP, and when Firelight by Centura launches, I then stake that FXRP, and I receive a liquid staking token, which is STXRP. I now, if I want to, can take that STXRP and I can go to kinetic markets on Flare and I lend the STXRP for yield in addition to the staking yield. I then borrow stable coins against that STXRP to buy more STXRP. And then I add the additional STXRP to my initial lend of STXRP on Kinetic. Is that a form of reusing XRP or the reuse of XRP? Short answer, says ChatGPT, yes, that's reuse. You're taking one XRP exposure and putting it to work multiple times across the stack. Now, I don't need to know what the example is. I don't know what the example is, but it says, here's what's happening in your example step by step and why it counts as reuse slant velocity. XRP to FXRP, you lock XRP and you min FXRP. The effect part of XRP's effective float is now tied up and backing FXRP. FXRP to stake XRP to STXRP, liquid staking. You take your FXRP, for example, on Firelight and receive STXRP, the receipt of the token. The effect, the staked principal is locked. While you hold a liquid claim, you can move again. STXRP lend on Kinetic to borrow stablecoins. You supply the STXRP as collateral and you earn yield and you borrow against it. The effect, your original XRP exposure now supports two activities at once, earning and borrowing. Then, of course, talks about what the loop is. The loop, borrow stables, buy more STXRP and resupply. It's a loop. It's interesting. I listened to a very fascinating conversation interview with the lady from Franklin Templeton. I forget her name, who's into crypto. She kind of leads or heads the charge for crypto at Franklin Templeton. I forget her name. She's interviewed a bunch. She was being interviewed by Cal Chasse, and she was fascinated in how DeFi came up with this kind of loop thing and how it's being done, and was loving the idea of that being implemented more from traditional players, TradFi players, on her platform, where they have a crypto division and all that stuff at Franklin Templeton. All right, so where am I at? Loops, borrow stables, buy more, resupply. You lever the position, increasing total turns per unit and on-chain activity. The effect, higher velocity and large required inventories, slant collateral, locked across protocols. Now, for now, we may think Flare, but eventually we're going to think the XRPL EVM, and eventually we'll think the XRPL. Eventually. So why is this reuse, and why it can matter for the price base of XRP? The same underlying XRP exposure is a recycle through mint, stake, lend, borrow, buy, lend. This is why I keep trying to get these people with the death grip on their ledgers to understand. You've got the death grip on your ledger, hoping for some market thing to happen when you can make it happen. You can make it happen with a portion of your XRP, whatever you deem that to be. If you deem the portion to be 0%, then you're going to get what you get from that 0%. If you deem it to be 1%, 2%, 5%, 10%, you are effectively in the model that the formula that we talked about represents. You're participating in that actively. Not this reuse thing. Reuse is just one part of the formula. Right? Why this is reuse and why it could matter for the price base. Each hop locks collateral slant buffers, in parentheses, FXRP backing, staking lock, lending collateral, safety margins, which shrinks effective tradable float. This is the thing that the people with the death grips on the XRP are not understanding. It's the participation in the ecosystem with your XRP that's going to bring the value, that is going to determine this re-anchoring of the price. Right? More turns plus more lock collateral, more reuse of the same asset plus the locked collateral, two different things, equals the velocity times the required inventories side of the equation. There's got some caveats before you try the looping strategy. We won't get into that. You don't have to do the looping strategy. I'm just saying that's what I do with a portion of my stuff. That's what I do. I've been in DeFi for a minute. I understand how it works. All right. So, anyways, there's some other stuff. Yes, that's XRP reuse, one exposure doing multiple jobs, staked, collateralized, borrowed against, and looped, raising both velocity and locked inventories in the system. Few. I've been doing a lot. I've been doing a lot of these my hashtags with F capital F dot capital U dot capital T dot. Few understand this. Few understand this. It's important. Important to understand, right? I want to see if some more people checked on before we get it. All right, so this is a little bit long, but again, a little thought out loud, so I want to share it. But here's the one thing, here's the other thing that I want to know. I just feel like I'm no genius. I'm a guy who's been in crypto since 2016. I just think if I know what you're saying and I understand what you're saying, and I just gave an example of the reuse of XRP, my own, certainly the institutions know of this example, of just one example of reuse of XRP. That's the reuse that I see that I'm comfortable with. What are the TradFi reuses of this XRP? What are they going to be seeing? What products are they accustomed to using and being able to use this asset XRP and reuse it, right? So I'm said certainly institutions know this as well, but why is it that I just feel like the Bitcoin holders, especially the ones who've held Bitcoin since 2012 or 13, appear like they don't understand it. I just feel like if you've been in crypto since 2012, 13, or 14, you have to understand this reuse of XRP. But maybe what it is they don't understand is how this reuse of XRP is part of a formula or strategy that certainly institutions understand and want to implement. I'm just rambling. Turn the microphone on and just ramble. I'm trying to understand it. Is it the Bitcoin OGs are just, they don't want to hear it, so they pretend like they don't understand? Why do they keep trying to disregard or not consider this reuse of XRP and how it works? Is it just because they're not institutional players? So thus the lack of education. It's hard for me to understand how they don't see the formula that you, and I know you said it's not a formula, but it's a form of a strategy. It just seems to me that they would understand the price base, not space, the velocity, the depth required inventories. Is it just clear lack of not understanding how institutions work? Because to me, clearly Ripple understands this. I mean, there's a recent blog post announcement from Ripple. Everyone saw it, including the Bitcoin OGs. Ripple Prime is now, and this is the quote from the article, Ripple Prime is now expanding into collateralized lending for XRP and supporting a rapidly growing base of institutions trading XRP-based products. I go on to say, if I can read this article or just, this blog post, surely the OGs of Bitcoin can, like Dave Weisberger. Why is this constant, seemingly apparent ignorance as to what this really means? And I say, I know you can't think for them, but what are your thoughts on that? Because again, I think I'm not an institutional player. I'm a regular crypto person, just like OG Bitcoiners, just like Solana holders. I can't piece it together why they can't understand what you're sharing with me and how it all makes sense. That's my rambling. ChatGPT says, you're not crazy. You're seeing a different game that a lot of Bitcoin OGs are playing. Here's why the reuse, you're seeing a different game than a lot of the Bitcoin OGs are playing. Don't I say it all the time? You and I, my friends, we're playing a game that 99.99% of the masses don't even know is being played. And if you hold these assets, you're winning. Here's why the reuse slant velocity slant collateral story often gets waved away by them, even when it's laid out in plain English. This is the one I like the most. Why many BTC OGs don't buy the reuse plus velocity thesis, parentheses, yet. Different job, just different ruler. Their mental model is digital gold, value equals scarcity, plus censorship resistance, plus the Lindy effect. In that frame, any talk of rehypothecation, collateral, or credit smells like TradFi creep. Listen to this. They're using a monetary commodity ruler, not a plumbing slant liquidity ruler. The talk in the community from day one has been about the plumbing and infrastructure, the plumbing. Ripple is a blockchain infrastructure company, right? Incentives plus identity. I don't need to get into that. Their brand and audience and portfolios were built on store value wins, admitting that settlement assets repriced by way of velocity and depth and required inventory dilutes the core Bitcoin narrative. Market cap too big, which means it can't go higher, is a meme that sounds rigorous and is easy to tweet. It ignores float, haircuts, and turnover. So it went on to a bunch of, different reasons to help me try to understand. Right? And I thought it was important to kind of get a sense. So I go on to say in my conversation, got it. So tell me, why do you say that the asset XRP is a settlement asset? Can't you ask these questions to ChatGPT? And I would encourage you to take this whole thing from ChatGPT once you do it, and then take it to Grok V4 or paid, whatever one you got, some higher paid ones to get a better thinking. And say, this is what ChatGPT said about what I had to say. What do you say? Keep going, right? Keep doing your homework. Keep doing your due diligence, right? It's important to understand. Continue to grow in knowing what it is that you hold. Continue to grow and knowing what it is that you hold. I said, got it. So tell me, why do you say that the asset XRP is a settlement asset? Is this how you believe institutions and the people who work in the industry, like market makers and regional banks, et cetera, which would be PSPs, the people that you mentioned will be users of Ripple Prime, Ripple's custody entities, interested in Evernorth, et cetera? Do they see XRP as a settlement asset in the same way that you see it? Short answer, yes. The way I frame XRP as a settlement asset slant liquidity engine is the same lens many institutional desks use when they're evaluating whether and how to use it. They don't care about vibes. They care about moving value fast with low capital drag and hedgeable risk. What does quote unquote settlement asset mean? Not money you hold to save, but the asset you pass through, the asset that you pass through to complete transfers, net exposures, fund margin, or bridge FX. Because it's liquid, it's fast to finalize, and it's easy to hedge slant finance. Why does XRP fit that job? The properties: fast finality and cheap, predictable fees, reduces the fail slant latency costs, right? Think about pathfinding, the AMM, the DEX on the XRPL, which leads to compresses the FXX hops like USD, XRP, MXN without pre-funding multiple pools. It's a neutral base asset. How many times have we heard that said in the community? Which equals holding or moves to, avoids holding many quarter slant stables or quarter stable slant nostros. The hedge and borrow risk, if it's steep, will lead to desk able to reuse XRP. for collateral, for margin, for basis trades, etc. The operational separability. You can fund in a stable coin like RLUSD, but route slant settle via XRP when that's capital cheaper. As David Schwartz, Brad Garlinghouse say it all the time. How institutions actually think about it. Do the blocks check out? Custody slant controls. Can we hold this safely? Segregation, the SOC2, insurance. Eligibility. Is XRP acceptable collateral at a sane haircut? Credit slant hedging. Can you borrow it cheaply? Are perp slant options liquid to hedge? P&L slant to VAR. Microstructure to depth spreads. Can we move 10,000, 100,000 clips with minimal slippage across venues? Policy accounting, disclosures, these things. Who sees it this way? Cross-border PSPs, payment service providers, corridor banks, right? Pre-funding is their tax. XRP can reduce the idle balances and shave FX hops. Market makers and prime clients. This is the 9 out of 10 is how significant it is to them, these participants. The cross-border PSPs, the corridor banks. It's a 9 out of 10 for XRP and its significance. It's an 8 out of 10 for market makers and prime clients. It's a 7 out of 10 for multinationals with multi-currency payables. Right? So all this other things here, more stuff there, right? Just to kind of give an example. Bottom line, the institutional view isn't XRP equals a currency. It's XRP equals the thing that lets me move size, shrinks pre-funding, and finance/hedge cleanly. That is a settlement asset. That's the settlement asset. See what I'm saying? I'm trying to take I'm just thinking my thoughts out loud with ChatGPT. Here's one more. Okay, got it. What about the XRPL? Makes it very appealing to institutions. You mentioned here pathfinding, slant, the automated market maker, and the decentralized exchange on the XRPL. What about the XRPL makes it very appealing to these institutions? And I guess that just most of retail is not going to understand the prowess of this XRPL. I always say, I don't know how factual it is, but I always say, I've never heard a blockchain builder from any ecosystem say that their blockchain can move, quote unquote, anything of value, quote unquote, in 3 to 5 seconds for less than a penny. I've always said that. But what do you think the institutions know and see about the prowess of the XRPL and being able to move value, like you stated, pass through, the assets you pass through to complete transfers? What do you think the institutions are seeing? Do you think they're familiar with the pathfinding capability feature of the XRPL? Do you think they're familiar with the DEX and the automated market maker? ChatGPT. Totally. Here's the why XRPL answer the way institutional desks think about it. It's no hype, just what makes it usable at scale. What the institutions like about the XRPL, in parentheses, the real stuff. Fast, predictable finality. Fast, predictable finality with tiny, stable fees. That's why I've always said the XRPL is the only thing that I've heard said that can move anything of value in 3 to 5 seconds for less than a penny. Institutions think fast, predictable finality with tiny, stable fees. Low latency, listen to these two, this is important. Low latency and low fee variance reduces the fail risk and the P&L noise. This is the one that it got me. This got me thinking so much here. When you're netting flows all day, predictability beats theoretical TPS. Remember that phrase, because I brought it up later in my discussion. When you're netting flows all day, predictability beats theoretical TPS. Again, we're talking about what the institutions like about XRPL. Native DEX plus pathfinding, right? Built into the ledger, not a smart contract. XRPL has an on-ledger order book, DEX, and pathfinding that automatically finds the cheapest route across issued assets, order books, and pools. That means the USD XRP Mexican quarter, for example, or stable XRP stable can be computed and executed autonomically, atomically with the ledger doing the route math. Routing is a first class feature. Routing is a first class feature, not an app you hope stays upgraded. Talks about the native automated market makers. Point number 3. Liquidity pools are protocol features. So quoting and LPing don't depend on a single upgradable contract. Fewer moving parts equals risk review and operational sign-offs. They can talk to you about the issued assets and trust lines. Point number 4. Point number 5 is payment primitives like the escrow payment channels, these checks and the multi-sig. Mature tooling plus uptime. The XRPL has a long history of high uptime and standard APIs and SDKs. Listen to this. For IT, change control, and auditors, it's boring and it works equals gold to institutions. Cost of capital advantage. Because finality is fast and routing compresses the FX hops, the XRPL reduces the pre-funding and trap balances. Remember the days when we used to talk about the pre-funding and the no-reversals all the time? Pair that with eligible collateral by way of Ripple Prime, and you get reuse plus cheaper credit, which turns to real balance sheet wins. Answer to my question, do institutions actually know these features? Yes, integrators do. The people who scope integrations, PSPs, quarter banks, market makers, prime desks, systems integrators, absolutely evaluate the pathfinding feature, the native DEX AMM, trust line controls, the fee and latency stability. Why retail misses it? Retail thinks payments equal currency on the invoice. Institutions split the stack. Invoice, which is the cash leg, versus routing, which is the liquidity leg. Right? And there's more examples. And this is an important thing here. Why predictability is greater than TPS. Most of crypto is constantly out there touting the TPS numbers. They want to just increase it. I mean, Solana's got some fire dancer thing to come in, whatever. 1 million TPSs, right? There's always on this TPS thing. Why predictability is greater than TPS for institution that net flows all day. Netting flows equals constantly offsetting MIDI pay slant receive legs, so only the small net actually moves. When you do this all day, the winners are systems that are consistent, deterministic, reliable. A giant TPS number is mostly marketing. What treasurers and op teams care about are the operational stats that keep reconciliations clean and capital costs low. All right, I'm going to end right here. The 4 things that beat raw TPS. The 4 things that beat raw TPS: low and stable latency, deterministic fees. If fees are sub a penny and they don't spike, you can quote prices and lock offers without padding. That tightens spreads and wins more flow. Finality that you can book. Very low fail slant retry rate. Just to name a few. This is just some of my back and forth. Bottom line, the TPS is a stadium capacity sign. Predictability is the train schedule. When you're running trains all day, the schedule, not the stadium, determines whether you scale. I like that. I'm going to end on that one. Guys, do me a favor, hit that like button on the way out. I appreciate it. I'm telling you, this, let's go back and forth, right? Go back and forth. Maybe I'll do part 2, finish this up tomorrow for you guys. It's important that we continue to know what it is that we hold, continue to grow in our knowledge of what we hold. All right, fam, do me a favor, hit that like button on the way out. That'd be super duper cool if you could do that. I appreciate you guys. Happy Veterans Day to each and every one of you. Do me a favor. If you happen to be in that 55% or so of people that have been hanging out, listening to and watching the Crypto Series, do me a favor. If you've been enjoying those hangouts, please consider subscribing to the channel. And don't forget to ring that notification bell, baby, so that you know whenever we go live or whenever we upload a video. I'm going to end this one like I do all my videos and remind you guys of this. Old money doesn't want you to win. But that's okay, though, because you and I, we're already winning. And I would ask you to consider this, or perhaps ponder the idea or notion of living your life permissionless. I'll talk to you guys soon. See ya. Bye.